All right, perfect. Everybody, hello and welcome to 2022. It's going to be an exciting year with lots of interesting things happening, geopolitical tensions, and lots of trading opportunities. So hey, follow along. My name is Yaroslav Burchenko. I'm a market analyst at Olymp Trade, and today I'm here to talk to you about the Heiken Ashi candles. It is found on your graph right here, and you guys can follow along with me here. We have, the area chart, which is basically a line graph, Japanese candlesticks, which have the most amount of information, and then we have the Heiken Ashi, which hides certain parts of the information, and I'll give you the mathematical formula in a few seconds, but basically it softens the edges around the graph. It uses two moving averages in order to calculate what it is printing for you on the graph. Now, before I get way too far ahead of myself, I want to ask you guys how you're doing. How's the sound and quality of the picture and the sound? Of course, let me see if you guys can hear me and see me. And if you guys have any questions, please feel free to ask them in chat. The webinar should run no longer than 15 to 20 minutes. And if you guys have any questions built up, then hey, feel free to go ahead and ask them. So actually we have Inspire Yourself. He says, hello, sir. I've joined Olymp Trade. Oof, I've lost more than $1,500. Would you please tell me how I can success in trading? Please give best solutions. Thank you, sir. Oh man, I'm sorry to hear that. You fell into the trap that everybody fell into. Your situation is very close to mine. When I first started trading in 2014, I lost $2,000. I was really gung-ho, and but it was a turmoil time in my country, and so I made some of that money back in Forex trading. I was trading on currency valuations. But yeah, it's always killer to lose money, and so this is the lesson that you paid for. Lesson number one is you need to keep your stops short. You need to keep your risk low. If you're new and you're just starting to trade, that's a lot of money that you put on, right? You are in control of your finances, and so you are ultimately responsible for your actions. And so I will try to teach you how to use Heiken Ashi in order to get better results. And remember, the results you're going to get, I spoke about this in yesterday's webinar, the results you're going to get is not going to be from 1 or 2 trades. It's going to be from 150 trades, 90 of which you lose. And the other 60 are going to bring you the profit that, if you trade correctly, are going to bring you, more profit than you lose. Keep that in mind. That's kind of the key statistic that you need to keep in mind in trading. You need to do a lot of trades. They need to be small, and you need to either, like if you're trading FTT, you need to win more than you lose. You need to have 100 trades be positive and only 50 losses. But if you trade things like Forex, or if you trade stocks on the Stock PT platform, those trading platforms, they give you the opportunity to trade for the long term, and it also allows you to get in and out of trades and limit your risk in terms of a very small stop loss and have your take profit be very far ahead. But again, that's also difficult. Like it's incredibly difficult to catch a move like this, right? But they do exist, right? This is, not this, but I just want to show you examples that it is possible to make money. Like I had a very, very poor year last year, and then I had, these 2 monster trades that covered some of the monster losses that I had. And, I still worry. I still worry about my money. And, it's basically, you need to pinpoint those opportunities in the market, and you need to do it like on a consistent basis in order to make a lot of money, in order to make money trading on the financial markets. So I just want to say what's up to Guruvav Saxena, Rajiv Guru, hello, welcome you guys. Ash K. Agrawal, thank you so much for letting me know that the voice is clear. Best trade time, sir? Really good question. I think I'll answer that as well. So if you look at a world clock of when the different markets come online, just because I'm awake during the UK, European, Asia session, I trade those sessions. I'm also aware that when the US comes online, online, that's usually when we have some reversals, a spike in volatility, and sometimes that may not be good for my trade. So I trade during the UK European trading session. On the open of the UK session, I start my administrative duties, I watch over the markets, and then I end somewhere around, at the end of my work day. That's when the US session comes online. So best time to trade would be sometime right now. So thank you for asking that, friends lover. Olymp Trade Guru, Sir Fixed Trade, fixed time trades. All right, I'll put those on. Hi, sir, I'm earning like $300 in fixed time trade, but now I lost that. How can I recover them? So that seems to be the question that we're really having today. And so I won't be placing a trade consob because yesterday I did that. It came off the cuff. I was telling some people something else. Right now is an educational webinar. I'm not going to be doing live trades. You guys can stick around like right there. In 50 minutes, there's going to be a lot of live trading. You guys can check that out if that's your thing. But I'm going to be going over the Heiken Ashi candle, and I'm going to show you guys real quick. So have a look at this. This is the formula. You can take a screenshot if you'd like. I don't find that it's necessarily important or that it's necessarily helpful in your trading. So I'll just leave that open for a few more seconds. What do I mean by US UK session? Let me go ahead and show you that by all right, so there is a website. It's called Market 24-Hour Clock. Let me go ahead and drag that onto my screen right here. One sec. So perfect. There we go. Let's see if I can make that darker for you. All right, there we go, you guys. So this is basically a clock of when the market's open. We have the full 24 hours. And as you guys see right here, about 4 hours ago, we had the 5 hours ago, we had the London session open. We also had the Zurich session in Zurich in Europe, Frankfurt in Europe. We also have the Moscow session in Russia and Johannesburg. So these are, as you can see, there's a really active session right here. This is the Asia session, it's called. There's a really active European session. This is the session that I trade in. And then there's a really active US trading session, and South America comes online as well. And so that's what we have here. And this is what I mean by you need to pick one of these times that fit with your daily life that you can trade on. We won't be spending too much time talking about this now, you guys. So Heiken Ashi candles, this is what we have on our graph, right? You can see the difference in what they look like from candlesticks. You can see right here, Japanese candlesticks, they have like a lot of range. They show you a lot of like, this is where price was, this is where it opened, this is where it closed. We have the candles signifying that's where price went during the trading session and then came back. So pretty standard stuff, right? Pretty cut and paste. But when we go ahead and open up the Heiken Ashi candles, all that information disappears, and what you see is a large trend. You see a large bullish trend here, and then you see a large bearish trend here. There's actually five signals that you guys can gather from the Heiken Ashi. And the major one, the main signal that I want to show you guys is when you see a lack of like right here, we don't have a wick, and we don't have a wick right here. Maybe this would be better. So you guys see how these candles are showing a lack of a wick after a reversal? So these three candles are indicating that this is a strong uptrend, that we're in a very strong uptrend. And when you see something like that, that is usually the time you want to let profits ride. You want to stay in the trade. Like if you were to use a reversal strategy like the ones that I use, you would be getting in somewhere around these days, and then you would use the Heiken Ashi candle to confirm that, hey, this trade is good and I need to leave it on. And this pertains especially to Forex traders and to stock traders, and that's where the Heiken Ashi is mostly used, in equities and commodity trading. So when you see that the bullish candles don't have a wick at the bottom, that's a great sign that you need to stay in the trend. And what you can do is, when you get better at trading, guys, this is a technique you're obviously going to be using, you add to a good trade. So say you're in this position for the Australian dollar, Canadian dollar, you already risk, like I usually risk $3,000 on a really good trade. So maybe I would open 1,500 initially on that reversal, because I'm not sure if the Canadian dollar is going to strengthen some more, or if commodity prices are going to drop. But both of these are commodity exporting countries, so it doesn't really pertain to this example. But nonetheless, I want to add to this position, I want to stay in this position, and I want to exit any shorts, right? This is for any of you that may be trading short. You definitely want to get out when you see that there is no lower wick in this candle right here. Now, there's another indication, another indicator that we see, and it is right here. Let me show you guys real quick. So in this area, or in any reversal area, we have the likes of this candle. Now, who can tell me in chat what this candlestick pattern is? I'll continue talking about what that candlestick is, but there's a specific term for that kind of candlestick, and I'll wait for you guys to answer it in chat. But basically, when you see this kind of candlestick, it signifies a reversal of trend, right? If we don't have any wicks when we're in a trend, that signifies that's a good trend. But what if the wicks are two-sided? If they go both to the top and to the bottom, what does that mean? Well, it means that we are unsure of where it's going to go. It indicates that there's going to be a change of trend. It's a very good and very powerful tool that you need to use with the Heiken Ashi candles, is that is a reversal of trend. And from here, you guys, what you can do, let me go ahead and open up chat. I seem to be missing it. There we go. Doji, good job. Vagani Ridmar, Dr. Dadson, Randy Manya, Sukanya Ate, good job, you guys. You are absolutely correct. That's a doji candle. Now, what it means on a candlestick chart is very different to what it means on a Heiken Ashi candlestick chart. Really, what that means is that there is a high probability but high risk that it's going to change. Like if you can see here that that obviously wasn't a change of trend. So to make the most of this indicator, you really need to combine other aspects of technical analysis, like line graphs, like support and resistance levels. Because if we were to just draw out a very simple line, you would see that it is right at support, or excuse me, right at resistance in this example. So besides the fact that, it's a doji candle, it's also a doji candle that is very, very close to resistance. And because this is Heiken Ashi, I can actually draw down this candle, or excuse me, this trend channel to something like this. The more connections that you have on a line with the Heiken Ashi graph, the more reliable that line will be. Which doesn't go the same for candlesticks, but they're kind of different ways of analyzing the market, analyzing the graph. So returning back to the Heiken Ashi, whenever you see a doji candle, like our very smart gentleman in chat, or ladies in chat said, I think those are all gentlemen, basically that's a reversal pattern. Technically, you can take a trade right when you see that candle. It's very high reward, but it's also very risky. Like I said, you can see that there's doji candles all over the place. So if you are one of those risk takers that wants to take the very top, like catching tops and catching bottoms, I wouldn't recommend that to beginners, but it's obviously a very rewarding experience. It's a very rewarding trade because you can sit in that trade for half a month and make a very big chunk of money. But you need to understand when is the right time to enter that trade. Now, one more thing, if there are no shadows, again, I wanted to drive this home, if there are no shadows, then that is a strong trend. So here we have a reversal pattern, and you can add other oscillators to this. Any kind of oscillator will help. Bollinger Bands indicator also is very helpful to add on top of this indicator. But when you see that after the move has happened, like here is risky trading. How do you know when to open here, or even the doji candle here, right? If you open on the very next day, again, this is a daily graph, it's a very big, sizable graph. On the very next day, you see how this candle, it took a few points to the top side. So if you had a very small stop loss, like something that would maybe break here at the top of the previous candle, you would be knocked out. So you need to understand that this is common in the market. This is normal in the market. So if you're looking to put really tight stops after a very solid signal, that's not how the markets work. You need to either bring your stop loss higher or enter when you have additional confirmation. Now, when I still use this because I think it's a very powerful tool. I wait for that confirmation. So perhaps the way that I see the markets, I don't think that taking the doji candle is the best idea for you guys. I think you should wait a few more days after until you start seeing candles like this that are bald, that have no wick, that have no tail, that have no shadow. That is kind of the best signal that you can take for the Heiken Ashi. So once again, the best way to trade using the Heiken Ashi is to wait for a reversal, have several reversal patterns, wait for the reversal to play out, to finish, and for the move down, for the move in the opposite direction to already start. So if you're trading on the FTT platform and you see a candle like this, this usually means that during today's trading or tomorrow's trading, if you put on a trade for the amount of 4 hours, 6 hours, or 10 hours, there's a very high probability that your trade is going to go through. This is one of the key things you need to understand when trading with Olymp Trade, is that the FTT platform and the Forex platform, they require completely different skill sets. Completely different skill sets. Of course, finding reversals and finding momentum stocks and finding momentum plays, that goes to show. That goes without saying. It's analysis of the market. But the way you enter, the amount that you enter, the trade amount, the time amount, the stop loss amount, they all differ between the two platforms. So whether you're trading FTT, whether you're trading Forex, with Forex there's a little bit more leniency, right? You can catch the doji candle here, put a stop loss up here if your trade size allows, and then just wait out the storm. With the FTT platform, it's a little bit different. You have to be precise with your time, but the amount that you can earn, like you can earn in one FTT trade on a candle like this, what a Forex trader would earn over the course of this entire move. And that's kind of the strength and the power of the FTT platform. In a nutshell, you guys, that's how you would use the Heiken Ashi candle. Let's have a look at the opposite. When do we have indications that something is not tradable? When do we have indications that something is not helpful to your trading? Well, whenever you start to see wicks on the opposite side, that would be an indication that the trading conditions are choppy. The trading conditions are two-sided. And only scalpers can make a lot of money in this market. So whenever we have a really, let's go to the, guys, let me know of an asset you want to trade. Is anybody in a trade right now? If you are in a trade and you want to look at the financial instrument, go ahead and write it in chat for me right now, and we'll have a look at it, and maybe I'll place my own trade. To be honest with you guys, anytime that I'm working, like I'm writing an article or I'm conducting a webinar, and I want to, and I see a good trading opportunity, I always take it. So it's just helpful for me that I work on the markets as well. Go ahead and let me know if you want me to look at a specific asset. I will go ahead and look for some myself. And I also want to continue telling you guys about two safe haven currencies, Swiss franc and Japanese yen, gold and Bitcoin. All right, let's have a look at those just because you guys asked for those. I saw gold first. So perfect. This is a perfect example of when you should trade gold and when you should not trade gold. So have a look at maybe this area right here. So this area right here is when gold starts to be very, very lucrative, right? I want to be trading gold at this time because right here in these next few days, I can see that we are in a specific uptrend, right? And one thing, like I'll tell you guys this, if you look at any part of the graph, you will rarely find two Heiken Ashi candles giving a signal and then that signal fails, right? I urge you, have a look at this. They usually go in 3s or in 1 or in this case in 7. Usually if we have 2 days that we have bullish growth or bearish selling, on the 3rd day is usually a continuation. The Heiken Ashi, better than any other indicator, has shown this to me. You can do some historic back checking. Let's even look at this. Like here, we have 2 candles, right? Boom, a 3rd one is still bearish. It may not be bearish to the very top side, but nonetheless, the momentum is up. So if you open from the bottom, you will have a high probability that your trade will be good later on. Same thing here, 1, 2, 3 in a row, 4 in a row. Remember, this is not a signal because it has the wick, but this is a 1 signal. Remember, I said that they come in 1 and they come in 3, but they never come in 2. I mean, I don't want to say never. That is incorrect of me to say that. It is very, very rare to find them in 2s. Right here, 2 in a row, and then doji candle. So it does happen. But if you want, like the gentleman who said that he lost a lot, and I also saw another gentleman confess, hi, I've lost $15,000. How can I recover? Like, in how much time do you recommend? That's like a whole year of really good trading if you're trading with a small account. Like 15,000 is maybe half a year's work for me. So that's quite a large amount. I would recommend really stepping back, stopping trading for a little bit, getting a job, and looking at the way that you approach the market, because that's a massive loss, right? I imagine that that's a big sum for you. That's a really big loss. But anyways, let's continue with the webinar. So that's what I wanted to show you guys. This would be a good time to trade gold. Right here would be a good time to step away, but keep track because we're at a level of resistance. So at that level of resistance, you now keep in mind that, if we have selling action, if the bears come in and flood the market, then we want to sell. And that's what we saw. Like in a few candles, we have 1, 2 that confirm the bearish momentum, and then you want to be selling on the 3rd day. You want to be selling, you want to open up. And again, guys, keep in mind, you want to try to sell from the very top position. And how do you find that? Let's go through that today. It'll be probably the last thing that I teach you guys. But how do you find, like intraday, when a good time to buy, when a good time to sell would be? I recommend not dropping severely below 15 minutes unless you're scalping, unless you're trading on the 1-minute graph, unless you're conducting a webinar and you want the trade to finish in 1 minute. That's when I would drop down lower. But other than that, I don't want to drop down below this. And so here you guys can see this is the 13th of January here. Let's take this right here. So 12th of January is from here to here, right? This is the 12th of January. How do you read this? Well, there are 2 obviously really big waves that happen to us. And let's go back to the daily graph just so that we can see in the context of bullish trading, right? So we have 1, 2 on the 12th, which is what we're looking at today. We need to find an entry point to buy. When do we do this? Okay, let's drop down to the 15-minute graph, go to the start of the 12th. So right here, I wake up somewhere around 6 a.m. So somewhere around this time, I'm already up and I'm looking at the graph. So what I see in my head, I don't draw this out now, but you should definitely draw it out, is you want to draw out a trend line, and we're only up to 6 a.m. So somewhere around right here, I draw this trend line and I say to myself, every time that the price touches this trend line, I want to be buying, or I want to consider a buy. Now I make the candle like if we are right here, I would draw my trend line like this. Just so that you guys see I'm not joking or I'm not making this up, right? This is what my trend line would be even though we're right here. So theoretically, I would draw the trend line like so. And so 6 a.m. I'm up, 7, maybe had breakfast, maybe did some sports, already in the office. By 9, I'm in the office. Perfect. So somewhere around right here, I'm in the office, we're at a high and we're already coming down and we're still with the Heiken Ashi candles and they're showing us sells. right? We got sells right here. So I don't want to buy. I don't want to buy. But now that we're touching that line, I'm considering buys. I'm definitely considering a buy. And we have some doji candles on the Heiken Ashi. Doji candles on the Heiken Ashi, and then a few lines up. And so right around here, there are two things I'm considering. One of them is a breakout of this level. So if we break out above this level, I want to buy. Great, this is a great trade idea. Next, I could take the Heiken Ashi candle because the stop loss would be right here. It would be low. It would be right here. It would be only a few, it would be 25 cents. It would be 75 cents on gold. That's really good. That's a really tight stop loss. And I could also buy when I see two green candles like here. Another example of when this would be a bad signal, but then the very next one could bring you into profit. But again, you want to hold this trade for a few hours, for more than a few hours. If you're trading on the FTT platform and you notice that there's a massive turnaround, like this level here is a massive turnaround, and you can put on any oscillator. Let's go ahead and put on the RSI. You can put on any oscillator and see that it dipped down at exactly this level and then came back up, and that then we're already up, and then we're breaking above zero. Right? Those are all signals that bears are coming in, or excuse me, bulls are coming in, buyers, let's call them buyers. Buyers are buying in. Yesterday was a massive trend up, and you should always consider what happened in the previous days, like see if there's similar market structure, see if there's similar kind of turnaround patterns. Like if you look at gold, you can see that the turnaround patterns right here on the bottom are subtle. They're very quiet. You can never know for sure. And so one of the things that I would do is stay away from gold because it's really difficult to forecast. But if you are in gold, this would be the thought process that you would go through. So I have several signals that I would need to take. And so I would enter probably somewhere around here in these three Heiken Ashi candles. Also, we have this candle that broke out to the top. It's also where we broke out on the RSI index, and you could bet that on the CCI, the one that I use, we also had a crossover at the exact same area. At the exact same area. So I'd be using the CCI and I'd buy it right around this level. This is where I would be in at work already. I had my morning coffee. I had lots of discussions. We had our morning meetings, and boom, a great trade opportunity presented itself. In a nutshell, that's how you guys want to be using the Heiken Ashi candles. They work on smaller time frames, on larger time frames, but you want to be using them where we have sustainable trends. So currency pairs, unfortunately, are not the best kind of trading opportunities that we have because currencies are very volatile, right? They go up, they go down, and impulses sometimes last less than a few days. So you want to be sticking with an asset that's very trendy, like equities, stocks, and like commodities, gold, oil, palladium, things like that. So I'm going to spend the next few minutes answering your guys' question. You guys, that's it for today. If you have any questions about the Heiken Ashi candles, go ahead and ask them in chat right now. And I'm going to have a look at what you guys are saying. How many time for a trade, like 3 minutes or 5 minutes? See, this is the thing, you guys. You are looking for quick cash. You're looking for quick and easy cash. The 1 minute chart is ridiculously hard to monitor, is ridiculously hard to forecast, is ridiculously hard to understand. And I want to be in a longer trade with a smaller risk. In order to make a lot of money, you want to be consistent with your trading. And if I put on a very large trade, and if it so happens that I lose that money, then that stifles my work for the next year. It hurts my work for the next year because I lost a lot in a little bit of time on the whiff of a cup. I'd rather have, a larger margin of safety. I'd rather have more chances to open good trades. And that's what this kind of job is. It's about statistical advantage, and you want to put the statistical advantage in your favor. And so using a larger graph, using several indicators, and using a larger time frame gives you that margin of safety to have higher probability trades. All right. So can you tell if it's lifelong platform, and can we pay taxes over that? It is for sure a lifelong platform. I definitely think I don't think Olymp Trade does not act like a tax agent. Like your bank is a tax agent, right? If you're receiving funds from your investments, you're paying taxes. But Olymp does not. We don't cover taxes in your local country because it's a multinational company, right? We don't have any say with the tax regime in your country. So you would need to pay taxes yourself, which is what I do in my country. I have to declare my earnings from my trading, declare my earnings from my investments. So whenever I open a trade for more than $2,000, Arjun Patil, I saw you yesterday. So he had the same question yesterday. Whenever I open a trade for more than 2K, it will go in the wrong direction always. Why? I have lost more than, 30K in the last year and not succeeded yet. Well, like I said, bro, this is the job. Like here, I open, my standard trades are $3,000 trades, right? Those are my standard trades. And look for how long I kept that trade open, right? Here, hold on a sec. Come on, show me on the graph. Anyways, this was an $8,000 trade that went in my favor. This was a $6,000 trade that went in my favor, and all of them were open for this one. That one was pretty close, but this one was open for a week. Have a look at this. Opened on the 22nd of December, closed on the 23rd. So that's what I mean by having a larger horizon. But if you're trading FTT, then you definitely want to. And look, my trades go bad, as well. I've had some really bad trades last year as well. So I had to rethink of my strategy, re-educate myself, reenact my discipline, and I'm seeing some success this year now. So Vagani Ridham is asking, what is the difference? Well, all of these moves on the market are people trading. So because the world functions around the clock, these assets are trading around the clock, but it's not necessarily the same people, the same force, and the same motivation that's driving the prices. So European companies, remember that the currency market, like the euro pound, is a dynamic relationship between the two countries, between goods and services exchanged between those two countries. So the value of the euro in relation to the pound changes as companies, take their earnings back home and change them into pounds. Or if we're buying something, say from Great Britain, but we're in France and we need to change our French euros into British pound sterlings, right? Those kind of operations, they make up this market. It's not just traders like you and I that are sitting at the computer and making trades. It's actual companies, it's actual economies that are taking and using these resources, and that use is what changes the price of these assets. And so it's important because the US investors, they have different priorities from European investors or European companies. And that, I guess, is the difference. I hope that answers your question, Vagani. The Toast is asking, can you please do a course on all of this? Actually, you can have a look at our playlists. We have several courses that cover a lot of topics over trading. And if there's something specific you'd like answered, you can go ahead and write it in the comment section, and we will consider making something about it. Guys, my heart bleeds to everybody that's lost some money on the markets. Rajiv Guru said that he's also lost quite a substantial sum in the last little while. It hurts. It hurts me, and I'm sorry to hear that it happens to you as well. It's just a part of the market. If it's too difficult for you to handle loss, you took the risk, right? And so there were times in my profession where I considered, is this really for me? Because I'm an emotional guy. You can tell by the way that I conduct these webinars that I'm emotional. So for me, one of the hardships has been to control the emotions, to control my sensitivity to loss, to control my desire to get rich quick. And I've paid money for these lessons that some of you guys are going through as well. So it's part of trading. And if you think that big banks don't lose money, if you think international hedge funds don't lose money, you're wrong. Hedge funds go out of business every single year. every single year. There's only a handful, well, maybe 270, only a handful of good investment funds that are active and will be active next year. 270, no more. Keep that in mind. That's crazy. Like, that in and of itself is really like sobering to comprehend. So very helpful, Mr. Dadson, or Dr. Dadson. I'm sorry I called you so, Dr. Dadson. Thank you for your positive feedback. What can I do to make a professional trader? That question is probably not for me, and Google can answer that much better. Pound yen down, gold. All right, guys, we had a look at that. All right, I see. So EFN Scholar, what will be the best time to use Heiken Ashi, sir? What is the best time range to use? I would start. So guys, this is the thing. You're never looking at one graph. Never, ever, ever should you be just looking at the 15-minute graph and that's it. That's incorrect. That's wrong. Don't do that. You should always start with the daily graph. Excuse me. Any asset that you look at, start with the daily graph. Right? That gives you the broad picture, that gives you the daily changes, like you can see the volatility in the day, and that kind of gives you an understanding of where the global wave is going, right? Like you can see here that we're kind of, we've bottomed out. There's no more momentum going down, and you can only see this on the daily graph, and also with oscillators. You can see that some of the oscillators are even giving buy signals. Like right here, this move right here, would have been a buy signal. Of course, it would have lost money, but nonetheless, the trend is changing. And you can see that on the daily graph. Then you would drop down to the hourly graph and you would look at the structure of the day. Like you would say, so today we had one attempt to go lower, but it failed, another attempt to go lower, but it failed, then one more breakout. It made contact, but it was a fake breakout. It was a false breakout. So maybe, just like we saw in the daily graph, just maybe the support is gonna hold. All right, so what do we do next? Then I would drop down to the 15-minute graph and see right here, right now, is this a good time to buy? Right here, right now, is it a good time to buy? Yes and no. Like we're right in the middle of the middle. Maybe we even missed the best opportunity. The best opportunities were down here. But a breakout of the CCI indicator to the top side, like say if in the next two candles we break this level to the top, the 100 level, I would buy for 15 minutes or for half an hour or for an hour. Remember that the basic kind of gist is that if we have a breakout, you want to go 2 to 3 times the time frame. And so if my time frame is 15 minutes, I'm probably going to be opening a trade for half an hour or maybe more, maybe for 40 minutes, maybe for 1 hour. So consider those kinds of strategies when you're trading. So if your target is $1,000 per month, I would say you need $100,000 in capital. You need to strive, like in banks, in investment banks as a trader, because I studied at a bank. The requirement is 1% per day. So if you're a trader or if you're an algorithmic trader and you made a robot, you made an algorithm that trades for you, which is the way that it's done in banks now, your algorithm needs to make at least 1% a day, and then you keep your job, you get your bonuses, you're a hot shot, you're a good guy. So if you can make, with $100,000, you can easily make $1,000 a month, no problem. I would say that the more money you have on your account, the better, because then that allows you to make a lot of little trades, right? With a big account, you don't want to be making, $50,000 trades, $20,000 trades, even $10,000 trades is too much. The reason I say this is because I'm trying to trade not to become a bazillionaire. I'm trying to trade to provide my family with food, with vacation, with toys. And so my target is to have little bits of profit all the time, instead of like, maybe I'll win, maybe I'll lose. Like I can't do that anymore. I can't, accept that kind of risk. And that's my recommendation to you guys, is try to lower your risk and try to be stable in the market, right? Try to have, out of 10 trades, try to have 6 good trades, and then try to do that for 3 months, and then put on $100,000 on your account. right? That's the business plan that you should all be following. All right. Guys, that's all the time that we have for today's webinar. I think I answered the majority of your questions. If there's something that I missed, I do apologize. I see that there's still questions coming in. So please ask your questions in the comment section below. Other than that, I want to invite you guys to our lunar holiday event. It's coming up really soon. So as the lunar holiday appears in China and in Pacific Asia, then on our platform, you will see this kind of new event. It's a way for you guys to get prizes. There's going to be a loot box for you. So come back to the platform in a few weeks, and we're going to have new events and new kind of new ways for you guys to make additional money besides your trading. I also want to invite you guys to check out our social media pages. We have the Facebook and the Instagram right here, right above my head. And yeah, you guys can find all sorts of life hacks and trading tips and tricks, and make sure to sign up to the channel. Our YouTube channel is exactly for that. Like, we had a gentleman in chat ask for a course, like a full-blown course. Usually these things are paid for. Like, I paid thousands and thousands of dollars for my education. You guys get it for free, right? Olymp Trade is paying that money for you guys. They are paying my salary. So you guys go ahead and watch those videos for free so that you can really build up your experience and build up on your trading. Thank you guys so much for coming. It's been a blast to be with you. I wish you guys success and luck and happiness in the new year. Our webinars will continue next week on Wednesday. Thank you all so much for coming, and see you all next time. Peace.